Hi, we'll have a small recap or revision of single entry system. As we have discussed under single entry system, there are three steps. Number one is step one, or number one is calculation of the opening capital, and number two is calculation of the closing capital. Right? Step number three is ascertainment of the profit or calculation of the profit. Okay, let's proceed with the steps. Step one. Step one is your calculation of opening capital or ascertainment of ascertainment of opening capital. Okay, opening capital. And how do you do this? You will come to know the opening capital only by opening a balance sheet. What balance sheet is that? That's an opening balance sheet. Okay, so we'll take a format of the account. Okay, a format of the balance sheet, right? Then you have the, yeah, this is opening balance sheet. Opening balance sheet. Balance sheet. Okay, then you have liabilities. Okay, then you have amount, then you have assets, and you have amount, right? So uh, from the above problem, what are the opening assets and opening liabilities? Opening assets and opening liabilities. Look at this. Jones keeps his books by single entry method. On 1st May 2004, his financial position was as follows. There's one date that you see here, 1st May 2004. Do you find any other date? Yes, there's another date, one more date, that is 30th April 2005, 31st March 2004, 30th April 2005. This is the opening date and this is the closing date. The ODT, the opening date, the CDT, the closing date. This is given for our own convenience. Okay, right. And what are the details? Position of assets and liabilities on this opening day. You have cash in hand of 250, cash at bank of 3,000, and stock valuing 7,500. And you also have furniture and fixtures of 350, debtors of 9,800. All right, and is that all? No, there's plant and machinery also, right? 15,100. Now, lastly, you have creditors, 9,000. What is this creditors? This is a liability, and rest all are assets. During the year, Jones withdrew from the business various sums amounting to 5,900. The total withdrawal is 5,900. 5,900. What is that? It is the withdrawal between this date and this date. Okay, this is the withdrawal. That means this 5,900 is reflected in the second balance sheet. Now let's see the first balance sheet. Right, we'll just bold it so that these are headings, right? Liabilities and assets. Okay, first we'll take assets. Cash in hand. Cash in hand, that's 250. Okay, then cash at bank. Cash at the bank. Okay, that is 300. Then you have furniture yeah, before that you have stock, right? Stock, you have stock 7,500. Then you have fixtures. Fixtures. Okay, fixtures, right? Fixtures, uh 200 and 350. 350. Okay, then you have sundry debtors. sundry debtors, sundry debtors. Okay, that's coming to, yeah, how much is this amount? 9,800. 9,800. Then you have plant and machinery. Plant and machinery. Oh my goodness. Plant and machinery. Okay, plant and machinery. That is 15,100. 15,100. Okay, then that's it on the asset side. Then you have, yeah, look at this. That's it on the asset side. All 250 we have taken, 3,000 taken, 7,500 taken, 350 taken, 9,800 taken, machinery of 15,100, which is the last item. There's sundry creditors, that is liability. Sundry creditors, okay, creditors. That is 9,000, 9,000. Okay, then what is the, that's all the details pertaining to the, last year or the opening balance sheet. Now what was closing last year is now opening this year, right? These are all last year's balances, right? So what's the total? The total comes to 250 plus 300 plus 75 plus 350 plus 7, 9,800 plus 15,100 uh, comes to 3,006, 36,000, 36,000, right? 36,000 is the total. The difference between 36,000 and 9,000 is 27,000. Okay, and what is this difference? This difference is opening capital. Opening capital, right? On the liability side, we have capital and liabilities. Okay, and on the asset side, we have all types of assets, right? Okay, this is your answer. Okay, this is your answer at step one. Then step two is, step two, let's go to step two. Step two is, yeah, step two is ascertainment of closing capital. Closing capital. Closing capital, right? And closing capital can be ascertained by opening, I'm sorry, closing balance sheet, by opening closing balance sheet, opening closing balance sheet. Okay, take the format of the closing balance sheet, right, with assets and liabilities. All right, assets and liabilities. So these figures will be changing, right? Now look at the closing items. On 30th April 2005, his financial position was as follows. Sundry creditors 7,500. Fine. Sundry creditors 7,500. I changed it. Plant and machinery 18,100. I changed it to 18,100. Okay. Right. Next is fixtures and furniture. Okay, or fittings. That's 320 instead of 350. I'll make it to 320. I made it. Sundry debtors 13,300. I'm changing the debtors 13,300. 13,000. 13,300. Okay, 300. Then you have stock in trade 14,000. Stock in trade 14,000. Okay, 14,000. Done. Then you have cash in hand 150. I'll make this 250 to 150. Then you have cash at bank. You have cash at bank. How much is that? Oh, there's no cash at bank. There's an overdraft of 3,600. Okay. Oh, sorry, 2,600. 2,600. Yeah, if there is a cash balance, you would have written here, but there is no cash balance, but it is an overdraft. Okay, overdraft or bank overdraft. Bank overdraft. How much is that? Bank overdraft is 2,600 given in the problem, right? And what is the total? Total is not 36,000. Okay, it is not 36,000. 150 plus 14,000 plus 320 plus 13,300 plus 18,100 gives you 45,870. 45,870. 45,870, right? This is the total. This is the total, right? And this total is taken on the left side also. It's taken on the, yeah, it's taken on the, oh, there's a slight confusion, right? It's taken on the liabilities side. And what's the difference? Overdraft of this and the opening capital, which is your answer, will change. That is 35,770. 35,770. Okay, 35,770. This is your answer, right? Under step 2, right? All right. So what I have to do is, this is your opening balance sheet, and this is your closing balance sheet. It is by mistake you have taken here, right? Right. This is your 9,000. Then step 2 is over. Step 3 is step 3, right? Step 3 is calculation of profit. Calculation of profit. Calculation of profit. What is that? Prepare the capital account. Okay, prepare the capital account now. Right. Okay. Particulars. Yeah. Before that, you have to write the heading. Capital account. Account. Make it centraline. Right. Particulars. And also, you will have debit and credit. Debit and credit. Right. And take it to the extremes. Extremes. And you have particulars or details, okay, then amount, then the same thing, particulars and amount, particulars and amount. And you have, yeah, opening balance of the capital is this 27,000, and closing balance of the capital 35,770. Now opening balance is always credited with by balance brought down. That's what we have learned, right? By balance brought down. That's 27,000. Then to balance carried down. To balance, okay, carried down. That is 35,770. 35,770. Right? And there is a drawing. There's a drawing. Okay, what do you do with that drawing? The drawing is debited to the capital account. Drawings. That is given in the problem. Right. What is that? 5,000. You know, during the year, Jones withdrew 5,900. Okay. That 5,900 you take here, right? And take the total. 41,670. 41,670 is the total. Okay. 41,670. That's it. All right, that's the end of the solution. It is as simple as that. Okay, to ascertain the profit under single entry system, right? Step one, ascertain the opening capital by preparing the opening balance sheet, right? Then ascertain the closing capital by preparing closing balance sheet. Okay, then step three, under step three, calculate the profit by opening the capital account where close opening balance sheet credit, closing balance sheet credit, any drawings you will add, and with any additional capital you will credit. Okay, so the resulting total is 41,670. 41,670. 41,670. But in the book, it is given 14,670. That's a typographical error. Okay, ignore that typing mistake. That's it. That's the end of the solution. Okay. Any questions, please?